Hmm? Okay. Hi, very good evening, everyone. Welcome to this another round of webinar sessions we are conducting from our esteemed viewers, investors, as well as employees. These particular webinars helps you to understand the equity markets, how the market volatility is impacting your portfolio, how the geopolitics globally is impacting your investment decision. And I think right now in the current scenario, when we are seeing that yes, this is a decade of India, and we are seeing such kind of so many success stories about our country. So why not we should listen something about the same for the future of next 20-25 years from one of the industry expert, Mr. Raghav Iyengar, who is Chief Business Officer in Axis AMC. Raghav, who has over 25 years of experience in mutual fund industry and earlier associated with India Bulls MF as CEO. Before joining India Bulls MF, he was with ICICI Mutual Fund as head of retail and institutional business. I got a chance to interact with Raghav in various forums and found his thought interesting and relevant to a common man. Without taking much time, I would welcome Mr. Raghav to share his thoughts with us and how he see Bharat by 2047 and how it can relate to the success stories weighing ahead for our viewers as well as our esteemed participants on the way to go. So, without taking much time, I would just invite Mr. Raghav to share his thoughts. Thank you.
Thank you so much, Mohit. Pleasure to be back again at this Bajaj Investor Forum. Uh, Mohit, you've been very kind and we've done some very nice, interesting stuff together. Mohit
Yeah.
started off by saying a lot of things about geopolitics, markets. I must confess, I have no idea what's happening in markets right now. I'm in a very interesting place. I'm in Varanasi right now and I'm doing my first webinar from there. So it's actually City of the Gods, Mohit. But
True.
I think what I thought I'll do today was just put together a few things for you all to think about. And I chose this theme called Bharat at 2047,
Yeah.
which is essentially something at where will India be 100 at, when we are having our celebrating our 100th year of independence. As you
Yeah.
all know, we just completed 75. We
True.
are in the last, as they say, that's Q3. We have finished Q3 now. We are in Q4 of the 100 right now.
Yeah.
And I think it will give you a perspective of taking your mind away from all the noise, because I think,
Mm.
unfortunately, equities as a business creates a lot of noise. Every day there is some result, there are some incidents happening, there is market fluctuation. Ultimately, let's understand the share market or the stock market is a market. In a
Mm.
market, people come to buy and sell, right? But are you needing to do that? And many times, people in the stock market, specifically in any other market, I don't find any of us going like in Bombay, for example. If you go at 5:30 in the morning, there is a
Mm.
place called Dadar, which is the
Yeah.
hub for all the agricultural and flowers come there.
Mm.
But I don't see people who are in that market are people who are going there to actually buy or sell stuff which they actually need and consume, right? In the equity markets is the only place where people just get into a market just to have fun. There is no reason for them to sell or buy. Of course, a market does exist because it needs to give you your buying selling price. It needs to fix your valuation. It needs to fix a fair price. But in our life today, a lot of it is created by noise. So people generally just come in and buy, sell without really figuring out why they want to do it. And one
Mm.
reason is also because they're not seeing a 20-year picture of where things could be. If
True.
somebody had told me, for example, 20 years back or 25 years back when I started my career, that the Indian stock markets will be at this level, and it's simple projections, there's nothing great. I'm just going to try and throw
Mm.
some data at you. If it gets a bit boring, Mohit, please just come back to me. But
Absolutely.
we'll try and keep it as light as we can. Yeah, Jasmine, can we go to the
Yeah.
next slide, please? Yeah. So let's go. Yeah, keep going, Jasmine, please. So I think if we look at our journey of independence, I think very clearly we are the world's biggest democracy. Our foreign exchange is multiplied 35 times. I think today everyone knows we have the highest population. We've had almost an eightfold increase on highways, right? And I think these are some of the progress points. And this doesn't come out very naturally, because when we see it, it comes very, very gradually. Like today, one of the complaints I always have in Bombay is that, hey, roads take too long to build. But if somebody were to have left Bombay 50, 60 years back and he'll come back today, kind of roads, the hospitals, the population,
Mm.
very, very different. Next, please. Yeah. So I think very clearly today, if you look at it just look at number of medical colleges, right? I think that's a big determinant of how progress is, because uh, basic healthcare is something that is essentially required to build a nation. Our medical colleges have grown 21 times, and I don't know if you're aware. People say medicine is a very tough profession, but this year you had
Yeah.
like close to 23 lakh people, Mohit, giving the NEET exam for 100,000 seats. So even though we have 22 times the medical college, even if this grows another 200 times from now, we will yet have a bit of a short supply there, right? We've also seen massive literacy. We've also seen massive fall in infant mortality. These are all indicators of progress of how the country has come. Next, please. So I think this is again economic, because I think very clearly that's the social part of it, the medical, the number of universities. But if you look at passenger traffic, and I'm sure anyone who's traveled, especially or is traveling today, typically the post Diwali season is possibly the heaviest season for traffic, because this is
Yeah.
where the wedding season starts. And as I said, I just took a flight early in the morning. Bombay airport was chock a block. I mean, the flight I came in, for example, was
Missed
completely
way.
jammed. I don't think I saw a single seat empty. Same problem is there in our ports. So, and again, if you see our airports, our ports, they're all grown up like almost 15, 16, 18 times. And I think that's a very, very big number. Very difficult to sort of digest it. But when you look at something growing 20 times, it's almost like a baby going to a 6 footer in a matter of 18, 19
Hmm.
months. And that's the analogy I can give you. Next, please. Yes. Hello. Jasmine, can you go to the next slide, please? Sorry, Mohit. As I said, I'm not there. I'm relying on somebody
No,
else.
no, absolutely. We understand.
My apologies. Hello.
Megha or
Yeah.
Aditya, can you help moving to the next slide? Yeah,
Yeah.
thank you.
Thanks. I think this is another very, very important slide, because I think if you go back to our independence days, I think almost 15 out of every 100 babies or four were almost not getting past the age of 2 years. And you look at today, it's actually down to almost Western levels today. So
Hmm.
this is real progress, if I may to call it. I mean, life expectancy has gone from whatever 51 years to almost 70 years today, and obviously improving. It's not that it's stagnant; it's also improving. That means that what I'm trying to say is that the benefits of economic liberalization, the benefits of being an independent country, are getting passed on to large parts of the public. Next, please.
Hmm.
Keep tapping the slides, please. Oops. I think I have to just keep smiling. Hello. Yeah.
The impact of technology.
Yeah, I guess the challenges of technology. I don't know.
Yes,
My
yes, yes.
my stress was that am I in the right place to take this call? But we did a test run yesterday. I don't know what happened. I think obviously test is not worked.
Yeah.
Omkar, can you just please help? Or if there's a way that you can just transfer it to Mohit, maybe then or transfer it to
Yeah,
me.
that would be much better. Megha, do you have control?
I'll try and see if I can do that myself. Let's see.
Megha, can you hear me?
Something's gone on. It's gone off completely.
Yeah, I think so.
Uh, Sorry, Mohit. My
No,
apologies,
no,
really.
no worries, no worries. Raghav, are we trying something?
I'm trying something. Trying to. I have the presentation with me, but I'm not able to load it up here. Not yet. Yeah, hi.
Yeah, Raghav, we are back.
Yes, we are back, but we are on the same slide. Hey, Aditya, can you move it to the next slide? I need to make up some time. Thank you. Yeah, great. I know. Acha, he's not putting it on. You're not putting it on full screen, Aditya. Is that difficult for you? So anyway, I'm just going to go a little bit because I'm not okay. Great. So sports again. Sorry, your viewers. My apologies. Uh, I was expecting to have some tension because I said I'm not in
No
Bombay, so
worries, no
obviously
worries.
this is the perils of what we call working from anywhere. I think sometimes you lose that studio effect, but I promise I'll try and get this done
No, no,
and come to
absolutely.
the important
Please.
part. So I think, as I said, we have very good stories on infant mortality. Sports is fabulous. I think obviously the recent games, the Asian Games also was fabulous. More importantly, I don't know, one thing that really brought a lump to my heart or to my throat was the Paralympic Games. I don't know if you saw that, Mohit. I think that was fabulous. Indian disabled athletes really doing what they did. It's a story worth really listening about, and
Hmm.
makes our life actually looks much easier. Yeah, next Aditya, please. So I think yeah, vaccinations. I think again, of course, and more. This is your city. Actually, you contributed the most to this. Serum sits in your place. Actually, not too far from where you are, but
Yeah,
so I most of us, I think, if you remember, and I think I should just pause here for 30 seconds because it's actually quite unbelievable that we are where we are after a kind of a 2-year epidemic,
Hmm.
and when you look at the kind of fatalities that major developed economies have had, and what's happened in India, given our hygiene, given our health care, given, forget anything else, given the density of our population, I think yes, obviously we did have a lot of deaths, but compared to our population density, I think we managed it really well. And I think a large part of that was the whole vaccination story, right? I think, and it just goes to show that I think where we have come as a country. I think when 2020, when the pandemic broke out, I remember reading articles which talked about a frightening number of something like 25 to 30 million
Yep.
fatalities were expected,
Yeah.
which is something like you're talking of 250 lakh people. I think the eventual number was much lower than that. It is very sad. We did have a couple of breakdowns, especially in the second phase of the pandemic, but towards the end, and we are sitting here more than not too far away from that date, and like life is completely back to normal.
True.
Like I mentioned, airports are full, trains are full,
Yeah.
hotels are full. Things are. It's almost like that was a sort of a bad dream which just came, and we got up in the morning and went back to office, right? And that's
Yeah.
largely happened thanks to vaccination. So next, please, yeah. Aditya. So where are we today? I think very clearly we started with a rank of 10 and now we are fifth. In fact, the third and fourth are not too far away. Actually, the guys ahead of us are Germany and Japan. And as I was, just looking at some data, we are at about $3.5 trillion GDP as we are today. And Germany and Japan are just about four-ish, 4.1, 4.2 type. So I won't be surprised maybe in the next 3, 4, 5 years if we continue to grow. We are expected to grow at 6.5, 7% at this base of almost $3.5 trillion, and whereas Germany is actually shrinking, as you know, they have gone
Hmm.
into a bit of a recession. Japan has started doing well, but again they have a problem in terms of demographics because their working age population has really fallen off. So I won't be surprised if we suddenly get to top three more very quickly, and
True.
that puts you in a very different label because suddenly you are the world's top three economy. Yes, we do have the highest number of people, we have a lot of poverty, we have a lot of the other issues, but I think clearly we are moving ahead. And more importantly, I think when people ask me, and this last point is just for your markets more. Today, for example, we are at 6,100,
Yeah.
we were at 16,500. Today, we are at 18, 19,000. And you just go back and think in 2014, I remember when this index crossed 5,000, and I was again in financial markets in those days, and it was a big headline number because many of the people who had invested in those days had seen an index level of about 2,000. So for them, it was like a 3x appreciation.
Hmm.
And now suddenly, the same guys are now looking at another 3x appreciation. So just can you imagine
True.
somebody who put money at 2000 levels, which was not too far away, it was 2002, 2001, 2002, those lines, and suddenly going from 2002 to 22 in a 20-year period, your index has grown almost like 9 times, which is a big number. I don't think any other market, any other financial asset class has done anything to that. Now, many people say that's speculative, that's a lot of sattabaji, markets are manipulated, etc. But why that has happened is of the numbers on top of that. I mean, if you take any number, whether it's auto, whether it's steel, whether it's and it all adds up to that whole GDP number that we are striving to do. So I think equity markets are nothing but a reflection more of the economic activity of a country and of the companies which are in it. And as long as we are pretty much in that good range of 7%, our companies are giving returns of 13, 14, 15% per year. I don't see any reason why we will not see a Sensex level of 1 lakh in our lifetime, and maybe much quicker than that, basically.
Much
You know,
quicker, I
because
would say.
much quicker, yeah. So, I mean, people are talking now of a 1 lakh Nifty index. I won't be surprised. It's just a number. One, and the
Yeah.
reason I'm saying this again and again is please don't get confused with the headline number. The headline can go wherever it wants. We can hit 20,000. We may be hitting 20,000 in the next 3, 4 months. Does that mean you
Hmm.
pack up and go? Now just think about it. If you're at 2002, you invested and you kept the money, your money's up almost 10 times. And what did you do with it? Again, the same my vegetable vendor example which I started with. If you took that money out and did something more productive, very good for you. But most people just take it out and wait for a correction. And if you see
True.
over the last period of time, there's no correction because the country is growing. We are expected to be a $30 trillion economy by 2047, right? Let's go ahead here, please. So I think now very clearly, yeah, keep going, Omkar. Yeah, so let's see now. Let's try and put a crystal ball and see where it goes now. So obviously, one way to sort of determine the future is to try and figure out what if someone has done it in the past, right? And the American economy is a great model because they have very similar stuff like us. Of course, they're a much smaller country in terms of population, but they have the same thing. They have good demographics. They have a vibrant democracy. Yes, of course, people will now say Trump versus Biden is not a good democracy, but it's not an autocracy like in some other parts of the world today. It has a functioning, very functioning. It has a very very active press. It has a very very
Hmm.
active court, and more importantly, it's also pretty much a cradle of a lot of things. So how did they get to where they were? I mean, if you go back and people have forgotten that America was not the predominant economic power 100 years
Yeah.
back. To if I go back to let's say 1922 or 1923, the predominant economic power in those days used to be the United Kingdom, Britain, as they call it, right? So what did they do in 100 years that made them what they are today? Let's just look at that here. Next, please. So I think if you see, I think very clearly the U.S. economy got networked. I mean, they built huge railroads, they built a massive telegraph. Obviously, the 4T came. Next, please.
Hmm.
And this is a big ways. I mean, this is exactly what we are doing, right? I think if you look at transport and communication, we have almost a billion telephone users now. And we've just
Yeah.
completely leapfrogged the cable, the wire generation. I mean, I
Hmm.
remember very long time back, I was one of the few people in our house because my dad was an NRI to have a landline. It used to take us 10 years to get a telephone connection. And I'm not talking, this is something I remember. So it's not something which happened in my grandfather's era or great grandfather's era. 1980, if you got a telephone, you were a big man, right?
Yeah.
To open a bank account in those days took a minimum of 3 months. I mean, you would go back and forth with various papers, right? You didn't have anything called digital. There was nothing called jam, and there was no tax. I mean, if you go back and look at it in 1982, for example, the marginal rate of income tax for anyone earning more than a lakh of rupees was 90%. So if you made 2 lakh rupees, actually you would pay in the second lakh of rupees, you would pay 90,000 rupees as tax. And a lot of those things actually got changed in the US. They were also pretty much like
Hmm.
us. They had horrible transportation. They had a very bad banking system. They had no connectivity, and obviously they had very very opaque levels of tax, right? And we have changed a lot of that. So if you look at it, next please. So tax reforms, I don't have to talk about. I think today, I think this tax filing for me in 23, and I'm sure for most of the viewers here, had a very very good. It was a very very pleasant experience because all the data was available. You just had to check it, correct it, if
Yeah.
there are any mistakes, and file it. And I think most of the people I know have got their refunds or their tax orders back. So all that's happened in a 90-day window. You filed by July, and typically by September, most of the stuff happened. September, October. Next, please. I think, and what this does is that it gets you into a very, very different tax regime. So, like how Mohit and I keep asking you for SIPs, I think the government has a big SIP running in the form of GST. So every month, whether automatically because of the whole electronic way of collecting the tax, 170, 180,000 crores of GST just gets collected and paid, right? And net, if you talk about it, because there is a set of offset, but net, the government makes about 150,000, 140,000 crores of tax every month. So what does that do? It allows the government to spend on a lot of other things. Like next, please. Communication, I don't have to talk about. I think we are the most as I said, we've gone from cable to straight to mobile, and now from mobile we are in 5G. So we've got the quickest 5G adoption in the world today. I mean, in the last 1.5 years since 5G has come, almost 150 million people have already migrated to 5G. So these are crazy numbers. Now, what you will say, what's so great about 5G? 5G just allows me to do what I'm doing right now, sitting in a
Yeah.
hotel room very, very far away from you. And of course, I'm having these presentation glitches, but that's because of some other stuff. But it just improves the entire productivity of everyone who's working, right? Because you don't have to really worry about communication. Today, just imagine if we've all got so used to QR code payments, right? Or just got so used to GPay and Phone
Hmm.
Pay and all the other wallets which are there. But 10 years back, if you left your home without your wallet, you're in trouble. Today, frankly, if I don't take my wallet around, it doesn't make a difference in my life. It will in some
Absolutely.
places. But right from the Kirana guy who's, giving you a cup of tea all the way to maybe a Mercedes showroom, everybody's happy to take electronic permits today. So that's the big one. That's communication has done that. Next, please. Yeah. Transport, yes, I think this is the big one, and I think courtesy my job, I think one of the perquisites I have is that I'm able to go around and see, and it's actually quite mind blowing the kind of stuff which is happening. Bharat Mala project, for example, which connects all our borders, is practically ready.
Hmm.
The Bombay Delhi corridor mode is completely ready. In fact, I think they're inaugurated next week. So if that happens, you will go Bombay Delhi, which takes now something like 18 hours non-stop, will take you 11 to 12 hours. So you
Sure.
can actually get up in the morning at 5:30 and you will be in Delhi by the evening by 5:30. The roads are so good. I had a chance to drive on the highway near your place, the Samruddhi Expressway last week.
Um,
Yeah, complete breeze. I mean, it's amazing. Nagpur, Bombay used to take anywhere between 15 to 16 hours. And yes, they have
right.
the last 100, they have the last 100 kilometers pending. But once that gets done, I think you can actually do Nagpur, Bombay in like 8 hours. It's a beautiful road. It's
Wow.
as world class as anything that I've seen anywhere in my life. Yeah. Next, please. This is the other big one because I think all this is great. One challenge which everyone asks me is how does the country continue to grow? It grows because you have a very strong foundation. So the foundation of any economy ultimately in the monetary space is the banking system. So you may have the best economy like what China is having today, and one reason why the Chinese economy is not doing well is because their banking system is having trouble. They have a lot of NPAs, a lot of their assets are not earning any revenue. Banks are stuck with a lot of what we call NPLs, which is non-performing loans. So all
Yeah.
these are there. But today, if you look at it, you have a very good situation where India is in today, and it's not only banks; it's also very large, say, uh, non-bank lenders, like even people like Bajaj
Hmm.
Finance or anybody else. They're all in very, very, very good shape because the stressed assets in the
Yeah.
system are extremely low. So that's a very good thing for us. It actually makes our economy more resilient, and that's also one reason why you're seeing a lot of flows coming into India today. Because ultimately, if your banking system is sorted, you will not have any shocks coming to you for some reason. Right.
True.
Next, please. I'm not going to talk about this because I think this has been done to death. But if you ask me, this is really earth shaking. And I think the beauty of this whole system is the fact that uh, everybody finally has an identity number where I have, and that number
Hmm.
stays the same. So whether I use it for my Digi Locker, I use it for my Digi Yatra, I use it for my license, I use it
Hmm.
today. It's very interesting, but you cannot, even if you go to a funeral, they will ask you the Aadhaar number of the person who's passed away, and
Yeah.
that is how death certificates are issued, frankly, within 11 to 12 hours. And I
True.
think in some states which are a little more advanced, I think it's sort of you get it online within 3 hours basically. So
Hmm.
if this works, I think this has cleaned up a lot of our life, and it's made financialization, if I may call it, much much easier. So
True.
today, the same set of people, 20 years back, you had the same set of people constantly paying tax, funding the economy, doing that. Today, that number of people has gone much higher. And post demon, obviously, a lot of money is come into the official financial channel. So that's really, really good, because now today you have officially 100 crore bank accounts today. And things like subsidies, which used to have a lot of leakage, now actually goes directly into somebody's account. And
Hmm.
thanks to this, he's able to make third party, fourth party payments very, very easily. Yes. Next, please.
True.
So I think this is Jan done again. This is a big one again. We talked about this. Next again, yeah. Omkar. Sorry, Mohit, I'm just speeding up a bit because I know I
No,
spoke
no,
5 minutes.
absolutely okay.
But
Absolutely
wherever
fine.
wherever you think, and then this presentation is there. But
Sure,
I'm
sure.
just so sorry. I know I'm not sure whether this is resonating with the audience right now. But all I'm trying to do for the last 10 minutes is just try to give you 100,000 feet view of
Yeah.
how our economy is doing, right? And if this continues to do well, which I don't see any reason why it should not, I don't see any reason why markets will do badly from here.
Yeah.
Yeah, you and I can debate that. Yeah, from 2002 to 2023, maybe markets went up 9, 10 times. Will that happen again? I am a big India bull. My sense is it will happen because I think we are just slowly getting started, right? I think a lot
Hmm.
of things that we have talked about are things which have happened in the last 5, 6 years. And just imagine this continuing for the next 40, 50, say 25 years till we hit 2047. I think you will
Hmm.
find India in a very, very different economic trajectory. Does that mean that we'll all our problems will go away? Definitely not. But I think we will be a much more prosperous country.
Hmm.
We'll be a much more equitable country. We'll have a lot of proper social welfare which is available. I think the common citizen will have a slightly better life, right?
Hmm.
And I think that's the ultimate aim for all of us, right? Next, please. Yeah.
Absolutely.
Oops, and there. Okay. So broadly, I think this. I mean, these are our future growth drivers. So you have the great PLI scheme. So this is. I mean, everyone knows this. There's a big example here because of Apple, right? I think Apple came in, and we used to 2 years back. If you were to buy an Apple phone, there's a 90% chance or 99% chance that it would be made in China phone.
Yeah.
Today's a pretty high chance today that that phone is a made in India phone. And that's just one small part of what the PLI thing has done. It's done it in semiconductors, it's done it in capital goods, it's done it in obviously telecommunications,
Hmm.
it's done it in very, very interesting things like batteries, it's done it in solar panels. So all these are futuristic technology which will help us grow well. Now, who will use this? That's where point number two, the pillar comes in, which is the young. We are 65% of our population is age 14 to age 44. It's the highest working population in the world actually today. So in some sense, if the world runs out of people, we will be the ones actually in some sense exporting smart people, right? And educated people and getting the benefits of that, which is already
Hmm.
happening today. And lastly, of course, a lot of money which was being stuck in traditional stuff like gold and land, which is in some sense a little unproductive, especially gold. Gold as an asset is not a productive asset. It's basically a storage asset. You can't do anything with gold. It's ornamental largely, of course. So yes, if you're going to use it for consumption, great, because obviously you get joy with consuming. But if you're going to make investments in it, you can't put all your money into it. So I'm not a believer of 100% gold allocation, but which is what was happening maybe 10,
Hmm.
15 years back before the Jam Trinity came into play. Right? Next, please. Yep. So this is the conversion of that. So if you go back and see 10 years back, 30% of our household savings was in financial assets, right? And today it's roughly about 48%.
Hmm.
So it's just completely fallen off. So, and if I take this slide 10 years earlier, and I have the data somewhere in my computer, I'll have to try and find it for you. But I'm pretty sure that if I go back to say FiO2, this number would have been under 20%. So that means 20% of our money was actually getting into financial savings, which is everything bank deposits, life insurance, mutual funds, stocks and bonds, everything. 80% was physical. Today, that number's come down to about 50%. And I think the way uh, uh, the trends are showing is that maybe when I look at this 10 years, 20 years later in 2047, I think you will have a pretty Western way of looking at it where maybe 70-80% this number will just change. You know, maybe 80% will be in financial savings and 20% will be actually in physical assets, right? Next, please. So what are we doing? I think this is very clearly we are the largest economy. We will be the top three in the world. This is definitely there. I think to some extent we were over reliant on imports for a lot of things. Unfortunately, a big import of ours here continues to be oil, which is where hopefully the new electrification, the new battery technology, the transportation technology, there are leaps and bounds in technology. I think very soon you will find consumption of oil actually also coming off a bit. Uh, we will, in some sense, become the world's Sone ki chidiya. We were that 150, 200 years back. Today, we have a per capita income of about $10,000. We will get to $25,000 hopefully in the next 25 years. Obviously, we want to be the manufacturing hub of the world. I don't think China is going to give up that status very easily. But having said that,
Hmm.
we can easily accommodate the world's additional manufacturing comfortably. And lastly, I think, of course, I think we are in that sense, an absorbing nation. We are not a conquering nation.
Yeah.
We are a let live and let live, if I may use that term. We don't take unnecessary clash with people. We have no intention of becoming the world superpower or whatever. I think we're very happy people. We're happy to give. as much as we can, which I think is a very good contribution that India makes to the rest of the world. Next, please. Hello. Okay. So I think quickly, I mean, this is the journey to 5 trillion more. So this is a formula. I always try and get a formula into my presentations. So how do you get to a 5 trillion? If you put 5 trillion as GDP, C is consumption, I is investment, D is government expenditure, and X minus M is nothing but X is exports and M is imports.
Yeah.
Right. So if you get your debt exports theory right, you're sorted. Yeah. Next. So what? Aditya, up next, please. So I think a quick one. Sorry, just go past this quickly. Please go ahead. Next, please. So I think we think manufacturing will be a big story more in the next couple of
Hmm.
decades.
Okay.
2047, as I said, India aims to be the next manufacturing hub of the world. Very clearly, I think the theme of what we are launching today is a consumption plus an investment plus a net import or net export theme. And I think all these are the three big ones which, frankly, the government is also focusing on through a lot of initiatives.
Hmm.
So I'll end this here. Next, I think this is my last slide, if I'm not mistaken. Next, please. Yeah. Oh, yes, of course. This is my favorite one. Well, this is for you and me, actually. So people ask me what happens. Okay, you gave all this gyan last 20 slides, 25 minutes. You spoke so much. What happens now? But let's look at this. I mean, today our GDP is 3.7 trillion. Assuming we are at 80 bucks, typically US depreciates by about 4%. So my guess is in 2047, the US dollar will be 160 bucks, roughly more than this. And our GDP in INR, you see what happens. And 2047, 35 trillion is not my story. This is a government BCG thing which has come up, saying that this is where the aim uh, is to go to 30, 35 trillion is what the assumptions are. But this is not a crazy assumption. You will say, how do we grow 10x in 24 years, right? It's very, very simple. Take the 3.7 and take it up by about 7% every year. Add inflation
Hmm.
of about 5 6% to it. You will get about 12 13%. Typically, yeah. And if you multiply 3.7 and take raise it to 12% for the next 25 years, you will get roughly the number that I'm talking about. Today, our market cap to GDP is about 95%. So our market cap in dollars, Mohit, is about 3.5 trillion. So we are roughly almost 95% of the cap. Assuming that number, obviously, we keep that number, obviously, we'll give a slightly lower number, make it 80%. I think your market cap in US dollars will be 28 trillion, which roughly puts us where the US stock market is today. It's not that it's never been done, right? And then if you look at the market cap of the Nifty, that will go to something like 2,800 trillion. So today, if our GDP, if our mutual fund AUM is 46 lakh crores, right? I think just by the GDP number, I think that number can go to something like almost 1,000 plus crores in that.
True.
And our
That's true.
AUM can really, take off to something like maybe I don't know how many zeros will come in this, but yeah, 22.8 lakh odd crores is the sorry 228 lakh crores is there. Is where it can come to. So it's
Right.
not it's so just imagine. I think it's a 20 to 50x kind of a number.
Hmm.
This is obviously very simple mathematics. There's nothing doing it. Obviously, for this mathematics to work, the mathematics is the easy one. You put the number in an Excel and then you put it down. But when you look at more importantly why this is happening, and I talked about those 5 6 things. Many of the things that we spoke about, more we knew. It's not that we didn't know
Yeah.
about it. But the fact is that I think sometimes in the hubris of the market, and today, yesterday, RBI came up with a set of new rules, and obviously PSU banks and some NBFCs and all have got a bit hit today. But in all that news flow, I think what we tend to forget is the overall progress that the country is making and how
Hmm.
that's getting translated into financial metrics. And then, more importantly, how can we benefit out of the financial metrics? So, our idea
Got
to do that manufacturing theme for you also was that hey, if we can put some customer money there, because that theme will have no exposure to banks and IT, which is a large component of our index today. So if somebody wants to say, hey, I have got too much of bank and IT in my portfolio because the Indian market is almost 55% in those two
right.
sectors. How do I not participate in that? We have enough of money already. Can we look at something else?
Hmm.
Manufacturing is a good story on it, right? So I'll stop you, Mohit, because I'm sure there's some questions, and
No,
and
no,
I'm again
definitely.
my
In
my, my
fact, I would
apologies
say,
to the audience for the for the tech glitches, but yeah,
no,
we'll
no,
make sure.
it's absolutely fine. In fact, Raghav, the way you shared all the things at the macro level as at the micro level, and showing the growth success story of India in next 22 years, I would say. So definitely, with your thoughts and wisdom, the Kartavya Kal period, which we are calling it till
Yeah,
2047, this
yeah.
Kartavya Kal period will definitely be a golden period for all the investors. Considering if
Yes,
somebody can
absolutely.
just take out some kind of learnings from the data, from the happenings, whatever is happening at the global level as well as the Indian level. So I think that is a great success story we can, of course, talk about in years to come. So, Raghav, since you have mentioned that yes, this time is particularly precious and everything seems so good in next 20 years, what exactly the most common question we receive that yes, for the first time investors who have never started investing in mutual funds, what do you suggest them how to allocate funds in a mutual fund and what kind of categories they can consider while putting the money?
So I would start with a basic assumption here, Mohit. I have a formula called the 50-25-25 formula, right? So
Yeah.
when people are trying to invest, I think what they should try and figure out is that 50% of their money they will spend,
Hmm.
because we are in an expensive economy and India is getting into premium consumption. People
Yeah.
are no longer happy to buy unknown stuff. They would like to buy brands and stuff like that. And anyway, you
Hmm.
make money to spend. 25%, whether we like it or not, we will spend money on tax, right, in
Hmm.
some format or the other, direct, indirect. So let's get the basic thing that you have to try and save 25% of your net annual income every year. That
Right.
is, suppose you're making 100 rupees a year, you're getting 20
Yeah.
rupees of tax. So out of 80 rupees, you must try and save about 25% out of that. Now that money, let's start going slightly from the pyramid upwards, right? Let's not go top down,
Yeah.
let's go bottom up.
Yeah.
The younger you are, please take some health insurance and life insurance. It's very, very
Hmm.
easy to do. uh,
True.
I think Mohit's company will has a very good set of offerings. I think you should do that first, because it makes
Yeah,
a big difference, Mohit. And I'm this is
absolutely.
quoting from personal experience. I
Yeah.
started my health
Mhm.
insurance very late, and I'm really
Hmm.
paying the price for it. In terms of
Yeah.
rupees, thousands, I'm at least paying much, much more than what I would have paid had I started it early, right?
Hmm.
More importantly, please checking your cover once in a while, especially the health side. A 5 lakh cover 20 years back looked like a lot of money. Today, a 5 lakh cover will not even get you
Hmm.
a basic cardio surgery will cost you much more than that,
True.
right? So
True.
you have to keep in touch with the health inflation, as I call it, not just take it up by 5-6%. Once you're
Right.
done with these two, I think then you have to put some money into. You decide what's your stay. So obviously, someone who's
Hmm.
coming into markets for the first time and
Hmm.
has no major liabilities
Hmm.
in the form of housing loan or any other
Yeah.
family responsibilities, please
Yeah.
take that money and throw as much as they can into a mid and small cap fund,
True.
because these products need a long runway to give you good returns. Plus, they are extremely volatile by their very nature. There will be periods where they'll do very well, there'll be periods where they'll do very badly. So, the longer
Hmm.
time you give it, the higher the possibility of a good outcome for you, right?
Got it.
If you
Got it.
don't have that, but at the same time you say, no, I have immediate goals, let's say, which I need to save for something.
Yeah.
Let's say if
Yeah.
you have some saving needs for 5 years, so let's say up to 5 years, try and put money into hybrid funds,
Yeah.
maybe balanced advantage funds, equity savings funds,
Hmm.
good products.
Hmm.
5 to 10 year saving bucket, try and put it into large cap and large and mid cap. 10 and above, try and keep that into small cap and mid cap
Hmm.
funds.
Hmm.
This is broadly the three buckets that I would allocate money to. Also, if you can, in the initial part of your life, keep 5-6 months. That's my learning from COVID, that you have to have 5-6 months of emergency cash which you can go and hit.
Hmm.
And this is not some loan that you have taken and you're paid back and you can draw it down, because I have seen that when you keep a loan amount, banks can call it back. So this is
True.
hardcore money that you're keeping. That money should be sitting in a money market fund or
Hmm.
a banking PSU debt fund or something like that, because that's very, very safe. It'll give you
Absolutely.
it will give you similar returns like other fixed income instruments. But what it does for you is it just postpones. It allows that money to grow without you touching it, and it's available at practically 24 hours notice. One business day you can get your money back. So that's the
Got it.
good thing. So that's broadly the financial planning template which I can put in. Having said that, this is a very broad template mode. So this is
Yes.
where I think people like you and your team have to come in, because every individual is unique, right?
Yeah.
People tell me
And in
also,
fact, risk profile also plays a very critical role in terms
yes,
of and
yes,
the investment
absolutely.
horizon. So that is
Absolutely.
something, of course, need to be taken care of by the investors
No, I
whenever they
think
are making any
I think
such
we
decision.
found a very interesting statistic. So in Bombay, for example, more than 60% of our equity investors are age 50
Hmm.
plus.
Okay.
So when we looked at it, we were wondering what happened, and when we
That's the
checked
beauty
it
of
out,
the city, I believe.
it's not the beauty of the city. It's like very interesting. So you think that the 30-year-old guy has a lot of money to give, but actually the 30-year-old person is cash negative because they've just
Yeah.
saved, bought a house, and now the next 10 years they're going to be paying a EMI.
Yeah.
He
Yeah.
or she is not going to be in a situation to go out and put some big money into equity. So typically
Hmm.
by 40 45 years is typically, at least now, I hope in the next 10 years that number comes down. But typically at 45 is when you really are loan free, stress free, and then you start thinking of high risk assets. So,
Absolutely.
so it's a very different way of looking at things. Mohit, when we are started our life, we were all told that was
Yeah.
jitna tum chota hai utna equity mein dalo. But frankly, that doesn't work today.
That
If you
doesn't
have a
work like
liability,
this.
if you have a
Yeah.
liability which is slightly heavier, that's a problem
Yeah.
basically.
Absolutely. I think, Raghav, you said it very right. It's nothing like a traditional approach we used to think that youngsters are having high risk appetite and the
Yeah,
people at the later stage of their life are having a conservative approach. In fact, majorly in our platform also we have seen people who have crossed a certain age of more than 40, 45. They are the people who are risk averse and they are ready to take such kind of decisions so as to have investments in equity market. But for,
right.
yeah, for the youngsters, of course, SIP is one thing we can say is the best
Absolutely.
route to diversify and having a disciplined kind of investment approach. With a certain amount of investment, you can have a regular investment in different kind of sectors through different categories of mutual fund. And basis the risk profile and the investment horizon, you can definitely explore what kind of category suits you well. Right.
Absolutely.
Raghu, one question for you. Are we coming up with any kind of new fund category since it's the season of NFOs going on? And I
We have
believe,
a
yes,
manufacturing we have a manufacturing fund coming on the 1st of December month.
you want to
It's a
share something about it?
thematic fund. Basically, it will
Okay.
focus, as I talked about in the 2047 bridge. I think one
Right.
opportunity that India has is to try and become the manufacturing hub of the world.
Okay.
And government very clearly has taken some very interesting steps like PLI. And more importantly, what I'm seeing today is states fighting amongst themselves to get big projects.
Yeah.
This has never been there, at least when I to
Hmm.
my memory. So when if Maharashtra loses a project to Gujarat, there is a lot of noise,
Obviously.
and that's a good thing because
Yeah.
it's there's one segment of our population which is not very competitive on a
Yeah.
day-to-day basis is our politicians. They're very competitive every 5 years, but after that they become less competitive.
Yeah.
So I'm very
Now they are
happy if they
also
get.
becoming
They're
competitive.
also now, of course, this is their season to be competitive, so they will be
True.
competitive. But it is very nice to see Andhra Pradesh fighting with Telangana. It is Tamil Nadu versus Karnataka. It's nice to see these things. UP
Yeah.
advertising and
I
I
think
can.
such kind of events ensures that yes, growth definitely happens
Growth
for the
definitely
benefit
is
of
coming.
the
So a
people.
lot of that focus, Mohit, is
Hmm.
focused on the manufacturing space,
Yeah.
and we'll see a lot of new emerging manufacturing themes coming up. And
Absolutely.
so what we're doing is instead of just creating narrow themes like a defense fund or defense or a PSU or this, which I think are
Hmm.
great themes, but the investor has to be much more aware. You create a much broader theme which will look
Okay.
at all these aspects. They look at transportation, logistics,
Great.
PSU, defense,
Yeah.
everything that comes under new age technologies, and that whole equation comes under manufacturing. The interesting
Great.
thing about this fund is that we don't propose to have any investment in the banking and the tech sectors in this fund. So typically, it's going to be a big difference from our regular access funds because our regular
Okay.
access funds typically put a lot of money into that because
Yeah.
they are growth sectors, they're high quality sectors. Not that this
Hmm.
is not a
Hmm.
low quality fund, but we want to
Okay.
have a slightly different approach to the investing paradigm. Number two, it also gives you huge diversification because a lots of our index, both the
Yeah.
Nifty 50 and the Nifty 500, have
Hmm.
a huge amount of banking and IT in them. So
Okay.
if you want to buy something a little different, this is one area. And I think this is one place over the next 5 years which will definitely pick up,
Hmm.
irrespective of what happens in 2024. I mean, that's a question everybody's
Got
asked
it.
me that what will happen if 2024. Oops. Oh, Mohit got. Mohit, your screen went off for a second. So,
Hmm. Is it okay?
hello.
Yeah. Can you see me, Raghav?
Hello, what?
Raghav, can you see me? I think there's some network issue at your end. Is it so? Raghav, can you see me? Raghav, we can hear you. Okay, fine, friends. I believe there's some technical glitch. I would definitely go thanks Raghav for sharing his valuable thoughts, and thank you all the viewers and participants for attending this exclusive session. I believe the session and the thoughts shared by Raghav will definitely help you making some wise decisions about your own portfolio on your investments and considering the next 22 years of growth story in India will definitely help you decide your own investment journey with a better wisdom. Thank you so much, everyone. Thank you, Raghav, and thank you, Team Access, for arranging such kind of wonderful webinar. Thank you so much, and see you soon, Raghav, in months to come with again a new kind of learning and understanding for our viewers. And all the best for your upcoming NFO. Thank you. Thank you so much.